It's early Saturday morning, and I'm trying to think of a cool intro. Cheers. All right, thanks for watching the cool intro. Grab some coffee. Saturday morning. It feels like spring. Uh and for a few reasons. We've got baseball today. We got spring training in Arizona, and you just feel like all these, maybe they're not groundhogs, maybe buyers are prairie dogs, right? And we're starting to see buyers pop into the market. Now, if you look at the national news, you may not think that is the case, but I'm going to share with you some stories and some data today, and then show you some strategies, some presentations and tricks that we're using to really boost the confidence of buyers, get more people to open houses, get more people to engage or re-engage in the process of purchasing a home, and definitely boost up their confidence in doing so. So without further ado, thanks for watching the weekend update. Make sure you follow us at Lending Perspective on Instagram and on our YouTube channel. Like and follow. If you drop any comments, that really helps the channel. And you have a full library where our weekend update page will be refreshed basically every week. And I've got some links that I'm holding over from last week for contrast. All of our videos and the information we share is basically a full library there on YouTube. So check it out. Let's jump into the split screen. And the first story I want to talk about is pending home sales. Last week we talked about closed resale or existing home sales in January. Didn't look very good. It was significantly down. I called that the Great Wait. But what we're seeing tells a different story in Southern California, or the West, and San Diego specifically. So pending home sales were down about 1% month over month in January. But if you look at the link that I'm sending you here, and this is an important conversation to have with your clients that are either re-engaging or getting into the market for the first time in the San Diego market or the West, scroll down and we will see that Northeast was down, Midwest was up, the South was down, and the West was up 4.3% month over month, barely not even half a percent year over year. But let's take a look at San Diego. Number 8, San Diego up year over year 7.5%. So almost 8% increase when other markets were down. I also want to contrast this. So you're gonna see more upward pressure on prices. You're gonna see more competition. Thankfully, we've seen a pretty significant increase in inventory. At least that's what we're seeing, and that's what the numbers are saying. If we go to this other link that I'll put in there, I'm skipping ahead. World's least affordable cities revealed. San Diego came in at number 4 of priciest cities, top 9 most unaffordable cities. San Jose. Here's what was kind of interesting. Median days on the market. San Diego was pretty good. It was not the best. San Jose 40 days, Los Angeles 67 days, Long Beach 67 days. San Diego came in at 56 days with a median house price of about $900,000. So another great story to tell or share with your clients, and it's a reason why we continue to look for hacks for affordability. Oftentimes, as I've said, that does not come with price, that comes with incentives. We're seeing that more and more, even as they announced the big court decision yesterday that the tariffs are illegal, and I'm sure the administration is going to find another way to try to place these. They're already talking about it. Trump talked about it yesterday. But essentially, a lot of the stories were around builders who seemingly weren't as affected by the tariffs, but were affected by the cost to build, not able to drive down home prices in the way the administration wants, because simply the cost to build is too much. And so you're not seeing price incentives from builders across the country. We know, we work and partner with these builders. We are seeing financing incentives, which are helping people achieve greater affordability than price. So don't forget that. And also know that for each home that you put on the market, we will put together a open house playbook. And in that playbook, look, a couple elements similar to this. Like, so here's your virtual flyer. It'll have your information on it, information about the property, property report card. Other elements can be in here if you have Matterport or you have blueprints, we can add those things in there. Video walkthroughs. So if you're doing any social videos on that, we can plug those into this dashboard as well. But it's got financing options. Let's take a look. If you click on this, this is a digital flyer that someone can scan a QR code and go right into the affordability of the home, and they can look at it from here. Let me show you a different way to look at it. For this new listing, it's also our featured listing of the weekend. This is Kristen Walker, CRG Properties in San Marcos. Single family home, single story home below $850,000, right in that conforming wheelhouse. So if I just told you that the average sale price of a home in San Diego is about $900,000, that includes condos. Well, this is a single family home in San Marcos under $850,000. So doesn't need condo approval, doesn't for VA or FHA. And don't forget, every condo needs to also be approved by the agencies, Fannie and Freddie. And if it's not, which we see often, that can be a challenge for first-time home buyers trying to find affordable housing in our market. And as we all know, HOAs are not as affordable as they once were. So let's check out this. We put a 10%, we put a rent versus own. If you're renting a similar home for $3,500, which would be a pretty good deal in North County, buyer can put 10% down with a 1% credit. They achieve a rate below 5 3/4. 20% down, 1% seller credit. Again, rate below 5 3/4. No mortgage insurance. VA home loans. We've got obviously more active duty members of the military in our market than almost any other market, and that also means a heavy amount of veteran families. 0 down, 1% seller credit. You're getting an interest rate below 5.5%. Really what we're showing here is how we're creating more affordability using seller incentives on resale homes. And the last one, I don't want to bury the lead here. 3% down would be the minimum down for a first-time home buyer. And 3.5% being FHA. But in this scenario, if they went 3% down with using conventional financing, our home funded program, and I talk about this all the time, that offers a 2-to-1 match from CMG on any funds going into their home funded account. Essentially, crowd-funded down payment assistance can come from friends, family members, employers, or you, the agent. We can use those funds to help buy down the interest rate a little bit more, create better affordability, and get a rate below 5.5% using the grant from CMG and any closing costs credits from the seller to get a rate below 5.5%. And just 2 years ago, rates were in the 7s. Yeah. So this is why we're seeing what we think of as the great thaw, and we're starting to see more activity. It's why buyer activity is up almost 8% in San Diego County. So 3% down, a great option for somebody buying their first home, and they can use tools like Home Funded to get there. Now, if you go to the dashboard, we also have we'll have our featured listings, more Home Funded information. We want you to be queued up for that. And if you haven't joined one of our Friday live webinars for Home Funded, I encourage you to register for that. It takes about 45 minutes on a Friday morning. It's really going to school you up about this amazing and unique opportunity to help first-time home buyers. We've got Mortgage Rate Watch. So what are the rates, and the summary will tell you why they're happening. Here's a link to subscribe or at least sign up for the Friday Home Funded webinars. And then a share link to our mortgage dashboard, mtgdashboard.com. Has some cool tools on there for first-time home buyers or buyers entering the market, as well as folks that are looking to see if they should refinance. Now, if someone does need a new home in the future, but they'd like to keep their current home and convert it to a rental, well, improving the mortgage scenario that they have on that current property now is going to make that a lot more possible. A lot of your clients have told you one of their goals is to build wealth through real estate ownership. Well, if you bought a home in the last 2-3 years, you probably have a higher interest rate, be a little bit more challenging to hold on to that property while affording a new home. You're able to drop your interest rate down while you still make that your primary residence. You're going to see some benefits and greater ability to hold the property and purchase another one. Let's see. Finally here, we've got a list that we're creating for inventory for you guys. We want to feature multiple listings per week. Think of it almost as a virtual caravan, and we want to get those new listings coming to market early in the week so we can send them out to all of our partners, over 500 agent teams in California, by the end of the week. So more details on that to come. mtgdashboard.com will be updated this week with our February edition, and we're really talking about the sales activity, and then also how to help people greatly reduce the interest overall that they'll pay on their mortgage and get some monthly savings that everybody, I'm sure, could use. Have a wonderful weekend. I appreciate you watching. Make sure to like and subscribe, and we'll see you soon.